Hi everyone, Matt Curfman here with the Richmond Brothers with my trusty companion, Mr. Oliver. Oliver wanted to say hi. He wanted to send you all warm hugs because it's been so cold across the entire country and getting through winter. And we wanted to provide just a kind of short touching point and maybe economic update and kind of what we're thinking and feeling as we head further into the 2026 year. Also, while we are reflecting back into the early days of 2025 when the temper tantrum of the markets, let's say, around tariff deadlines were looming back in March and April of 2025. All right. So, just a couple of very recent things that have happened in the last week of January 2026. The Federal Reserve did meet and they elected to keep interest rates flat. So, they are actually staying the same. And so, at least for the time being, that removes that. As you can see from headlines, President Trump has announced the succeeding Fed chair. And so there'll be a whole process around that probably as the year goes on. And then the other piece that is very near term here coming up, just on our radar, is it seems as if we're moving towards another government shutdown. If you all remember, the last government shutdown was fairly extended and it was in the fourth quarter, November, December of 2025. So again, just something we want to keep an eye on. And obviously, outside of all this, there is a lot going on in the world, and there is a lot going on even within our own country. And so, again, I wanted to acknowledge that these things are going on. We want to help provide support to you, our family of clients who we work with respect to your life savings and just different decisions and risk tolerance. So that's really where we are at on all of these things. So as I think about perspective, I wanted to share this chart going back to, like I said, January through maybe like mid-April of 2025. So I'm going to put this on the screen here. And this is just the S&P Dow NASDAQ if you go back to January 2025. And this is graphing from the highs of 2025 to basically when the deadline was coming up for the tariffs. And this was basically in the first couple of weeks of April of 2025. And so obviously what you can see is this kind of precipitous, if I put this here, downtrend, and then you see kind of this cliff. And you look and say, geez, from one point in like February of 25, the Dow Jones was negative 16% from its high. The S&P was 19% from its high. And the NASDAQ was almost 24% down from its high. So these are really, really big moves. I want to take you back. It feels like a lifetime ago, but it was less than a year ago when we're in the middle of that. And, markets are kind of free falling and your stocks and mutual funds are free falling with it. The question is when you're in that moment, what's going to happen next? Tomorrow, the next week, the next month, the next 6 months. And the answer is truly, we don't know. And no one really knows. So the question is, did we have a portfolio design to support your comfort and your risk tolerance? So in that moment, if the markets kept falling, if they kept going down, and you had, let's say, a safety net somewhere in here, you would be pretty happy that you didn't kind of keep collapsing with the markets. However, if from this point the markets turned for whatever reason and kept going up, and your safety net was already deployed, you're going to miss some of that upside in those early days until buybacks come. There's no right or wrong to this. And the answer is, which is better? It's always going to depend on what happens next. And so the perspective is to try to balance, your risk tolerance, what you choose to ride the roller coaster or not with a safety belt, and just that we want to continually have communications with you. So if you say, look, I feel like I would like to take on more risk, we don't have to have safety nets. If you have a safety net or you don't have one and you want one, there are tools that are out there. There's always give and take to every scenario, every tool that exists. But in the end, when we are working largely with families and their life savings, they've spent their lifetime accumulating these assets, we'll tend to lean a little bit more on conservatism and safety nets wherever possible. Doesn't mean every asset you own has to have that, but just wanted you to have that perspective and that there is choice and flexibility. We're not married to any one strategy. So we want to keep communicating with you. We want to keep hearing from you. We appreciate the questions and the feedback. And then the next question I get before I sign off here is, are we in a bubble? And when you think of a bubble, what does that mean? What the question is, I think, really getting at is, are markets overvalued, and are we concerned that they're going to just collapse? And in periods in the past couple of decades you can think of might be the 2008, 2009 um, financial collapse in real estate market. And then you go back to the early 2000s and you think about coming out of the 90s, the internet bubble. And so the truest answer is no one really knows. One difference when you say, is AI creating a bubble, or that's a question that's asked, it feels, at least to this point, earnings of the underlying companies in the market are supportive of where current prices are. That doesn't guarantee what happens over the next year, but just kind of suggests that earnings are in line with where the market is today. So we want to keep an eye on this. There's certainly a lot of risk out there, but also opportunity for growth. So we appreciate having the opportunity to work with you. We appreciate the ongoing open communication back and forth. It's a mutual relationship, and our goal and our aim is to help co-author solutions that make sense for you and for your family. So thank you so much for tuning in. Thank you for being part of Richmond Brothers. And if anything comes up that you would like us to dive deeper on, please just email us directly at questions@richmondbrothers.com. Thank you so much, and make it a great day.